Today I am going to teach you plus one accountancy. Name of the chapter is ledger. Good morning students. Today I am going to teach you plus one accountancy. Name of the chapter is ledger account. Fourth chapter, ledger account. In previous videos I have taught you many lessons, that is many sums from the ledger. Now I am going to teach you some more sums from the same. Okay, yes, listen. Illustration from the chapter ledger. Illustration this is direct ledger. Okay, illustration sum number from our textbook. Illustration sum number illustration sum number 7, page number 96 in the old book. So illustration 7, prepare cash account from the following transactions for the month of January 2018. Listen students, this is very important. Usually the ledger accounts can be prepared with the help of journal entries only, but some sums we have to prepare without preparing the journal entries, direct ledger. That is called a direct ledger. You have to read the transaction. With the help of the transaction, you can directly post the journals into the ledger. Without preparing the journal, we can prepare the ledger. That is called direct ledger. Okay. So in illustration 7, prepare cash account. So you have to prepare only cash account without preparing the journal entries for the following transactions in the month of January 2018. So by that time, what we have to do, first we have to read the transactions. Okay, read the transactions, prepare the journal entry in your mind. So based on that, you have to prepare the ledger account. Okay, so illustration 7, page number 96. Illustration 7. Okay. Here, what account we should prepare? Only cash account. So we put here cash account. Cash account. Cash account. Date, particulars, JF, amount in rupees. Like that in credit side, date, particulars, JF, amount in rupees. Listen carefully. Now we are going to prepare ledger account. Okay, ledger account for the transactions given in the sum. Okay, no, we need not to prepare the journal entries, directly prepare the ledger account. This is called a direct ledger. Commenced business with cash, rupees 62,000. Commenced business with cash, rupees 62,000. What is the journal entry for this? Cash account debtor to capital account. cash account debtor to capital account. Here cash, now we are preparing the cash account only. So cash account debtor. So cash is available in the debit side. So your hand should come in the debit side. What is the date? January 2018. So 2018 January 1. What is the journal entry? Cash account debtor to capital account. So cash account debtor debit side to capital account. To capital account. What is the amount? Amount is rupees 62,000. 62,000. Next, date 3. Goods purchased for cash. Goods purchased for cash. Purchase account debtor to cash account. Here cash is in the credit side. So your hand should come in the credit side. Okay, what is the journal entry? Purchase account debtor to cash account January 3. So Jan 3. Cash account is in the credit side. So you have to put by purchase. By purchase. What is the amount? Amount is rupees 12,000. Next, goods sold for cash. Next journal entry is 10. Goods sold for cash. Cash account debtor to sales account. Cash account debtor to sales account. Now cash is in the debit side. Okay, your hand should come in the debit side. To sales account you have to put here. To sales, date is 10. Date is 10 to sales account, because cash account is in debit side. That's what credit cash account should be. Sales account should be in debit side. How much amount? Rupees 10,000. Next, wages paid. Wages means expenses. What is the journal entry for wages paid? Wages account debtor to cash account. Now cash is in the credit side. Your hand should come in the credit side. What is the date? 12. So January 12. So cash is in the credit side. Then which one is the debit side? By wages account. Okay, the corresponding debit entry is wages for this entry. So amount is rupees 4,000. Amount is rupees 4,000. What is the next journal entry? Furniture purchased for cash. So furniture account debtor to cash account. Now cash is in the credit side. So your hand should come in the credit side. What is the journal entry? By furniture. What is the date? Date is 25. Date is 25. By furniture account. How much? Amount is rupees 6,000. Amount is rupees 6,000. Okay. Now all the entries are over. Okay. Now we have to close the ledger. How to close the ledger? We have to check which side is bigger. Either debit side or credit side. Here debit side is more than the credit side. Okay. So what is the total amount? The total amount is 72,000 in here. So the same total should come here also, same 72,000. Okay. Debit side is more than the credit side. So the total should be equal in debit and credit, 72,000, 72,000. But here only 22,000 are available. Out of 72,000, only credit side 22,000 are available. So from 72,000 we must deduct the 22,000. We'll get balance is 50,000. Balance is 50,000. 50. This 50,000 is called a closing balance of cash account. So the closing balance named as by balance carried down. By balance carried down. What is the date? This is closing date. No, just January closing date is 31. This closing balance will come as opening balance in the debit side. So what is the next month to open? January is next month, February. So February 1 to balance brought down. This closing balance become the opening balance. So we have to put two balance brought down. What is the next month? January is next month is February. So February 1 is the opening balance. What is the opening balance? Same 50,000. For this 3 marks they will be rewarded. So what you have to do? First you read the transaction. Based on the transaction you have to prepare the ledger account. Required ledger account. Okay, so the cash account means wherever the cash is available. So debit side means debit side credit entries you have to put. When the cash is available in the credit side means you have to put in the debit side entries. Okay, so after entering all the entries, we have to close the account, that is which side is bigger, so that same amount will come in the both the sides. So the balancing figure will come in the closing balance. The closing balance become the opening balance of the next month. Okay, the same way I will put one more sum from the exercise. Okay, yes, in the exercise sums, yes. So prepare Anand's account from the following details. Okay, question number 9 from the exercise sums. Okay, from the exercise sums, question number 9. Prepare Anand's account from the following details. Prepare Anand's account from the following details. Yes. So the next sum is from the exercise sums. Okay. Prepare Anand's account from the following details. Question number 9. Okay. Yes. Sum number, exercise sum number 9. So I'll read the transactions. Based on the transactions, we have to prepare the ledger account. Prepare Anand's account from the following details. Okay, prepare Anand's account from the following details. So we have to prepare only Anand account without preparing the journal entries. But he has given the transactions. Based on the transactions, we have to prepare the journal entries only. Okay, no need to prepare the journals. We have to prepare only ledger account. Okay, what is whose ledger account? Anand's ledger account. So here name of the account is Anand, A-N-A-N-D, Anand account. Date, particulars, JF, amount in rupees. Here same date, particulars, JF, amount in rupees. Okay, this is debit side, this is credit side. Okay, listen, I'll read the transaction. 2017 July 1. 2017 July 1. Credit balance of Anand's account rupees 4,000. Credit balance of Anand's account rupees 4,000. So we are preparing Anand account. He already saying here credit side of credit balance. So credit balance means credit side. Credit balance of Anand account means opening balance of Anand account. So here credit Anand account showing credit balance, credit side balance. Okay, that is the opening balance for this account. Okay, so what is the date? Date 2017 July 1. Okay, amount entry is what? By balance brought down, because Anand's credit balance account showing here. So credit balance of Anand account rupees 4,000. So 4,000 rupees you have to put here. Okay, next. Date 15. Amount paid to Anand. What is the journal entry? Amount is nothing but cash. Cash paid to Anand. So here Anand is receiving this amount. Anand's account debtor to cash account. So now we are preparing Anand account only. Now Anand account available in the debit side. So come to the debit side. What is the date? July 15. So July 15 to cash account, because Anand is receiving this cash to cash account. Amount is rupees 2,000. Next. Goods purchased from Anand on credit. What is the journal entry? This is credit purchase. From Anand we purchase some goods. So purchase account debtor to Anand account. So now Anand account is in the credit side. Anand account in the credit side. So by purchase. Because Anand's account in the credit side. So credit side means our hand should come in the credit side. The debit entry is purchase. By purchase. What is the date? Date is 18. Date is 18 by purchase. What is the amount? Rupees 8,000. Rupees 8,000. Now, what is the next journal entry? Paid to Anand rupees. Paid to Anand rupees. So, paid to Anand rupees 3,960. Discount allowed by him rupees 40. Paid to Anand. That is, we are making the payment to Anand. So Anand is receiving this amount, but he is allowing some discount. So that is discount received. Okay, then what is the journal entry? Anand's account debtor to cash account to discount received account. Now Anand account is in the debit side. So come to the debit side. What is the date? Date is 20 to cash account. 3,960. 3,960 to discount allowed. Received. To discount received. Amount is rupees 40. That is allowed by Anand. So that means we are receiving the discount. That's what discount received. Then the last journal entry is goods purchased from Anand. Purchase account debtor to Anand account. Now Anand account is in the credit side. So by purchase. By purchase. What is the date? Date is 25. What is the amount? Amount is rupees 5,000. Now all the journal entries are over. Now we have updated all the journal entries. What we have to do now? That is, what we have to do means we have to check, that is, which side is bigger. Which side is bigger? Here debit side is 4,000 plus 2,000, 6,000 only. Here 12 plus 5, 17,000. So here credit side is bigger than the debit side. So both the sides should come 17,000. Here out of 17,000, here only 6,000 is there. Balance 11,000 is the closing balance of Anand. So that the closing balance should be named as to balance carried down. What is the date? Closing date is July 31. This closing balance will come as opening balance August 1 by balance brought down. What is the closing balance here? 11,000 will come as opening balance here 11,000. Okay. So 11,000 rupees. So closing balance is 11,000. Same as opening balance is also 11,000 rupees. Understood? Okay. So this is the direct ledger. Without preparing the journal entries, we have to prepare the ledger account. So in next classes, I will teach you some more sums, that is how to prepare the ledger accounts from the journal entries to the ledger accounts. Then from the journal entries, without preparing the journal entries, how to prepare the ledger accounts. In previous videos, I have sent how to prepare the ledger accounts based on the journal entries. Now I teach you two sums. They will give the journal entries. We have to read the journal entries you have to post them directly to the ledger without preparing the journal. Okay, this is called direct ledger. This sum will come in the 3 marks. Okay, this sum will come in the 3 marks. In next classes, I will teach you some more sums from the ledger. Then I'll go to the next chapter, trial balance. Okay, thank you.